From Forex Traders Daily, this is your daily analysis with Ross Mullins, live from Richmond, Virginia.
Hello everyone, this is today's video analysis for September 30th, 2016. In just a moment, we'll be taking a look at the NZDUSD, the New Zealand dollar versus the US dollar for today's trade analysis. But first, a recap of a couple of the trades that we've done over the past few days and some of the other market volatility that we've seen. Of course, today we're coming to the end of the week, but we're also coming to the end of the month and the quarter, so we could see increased volatility because of all those aspects. Over the past couple of days, we've seen some volatility and risk because of Deutsche Bank concerns. And of course, we have the typical news and data calendar that we have to worry about in increased volatility because of that. Today, specifically, 8:30 a.m., some Canadian data being released. So a lot of volatility could be seen in the market, and of course, if you're into profit, I would definitely suggest protecting profit if you have it, and in all cases, using appropriate risk strategies. Let's get started here with the USD CHF, and when we talk about that Deutsche Bank volatility and some of the other things that are affecting the market, take a look at the dollar franc. We've seen quite a turnaround for this currency pair over the past 24 hours. I'm just going to zoom it in here on the daily time frame and take a look at the past 2 days. Yesterday, we saw a pretty good sell-off where the dollar franc went down, trying to break through the support zone, the blue shaded area in the 96.70 level. No complete breakout underneath the blue zone. Then suddenly the market reversed and has now closed much higher than it opened yesterday, all the way back into the 97.35 level. I think today's another breakout day. We're looking for a clear indication of a breakout. If I take this little blue circle over here on the left, and you can see how the market challenged it, didn't break it, turned around and went back up. Here where this red circle is, and I'm just going to widen that out a little bit if you give me just a second to do that. You can see now we've seen a couple of attempts to get through the blue zone and has not satisfied a break. Even if you incorporate yesterday and today's candle, we haven't satisfied a break of that blue shaded area 96.70 on the daily time frame. So very interesting on the daily time frame. Of course, the 4-hour was a little bit different, but of course, we don't see the real breakout. Now, I think we must and need to see a break above 97.35, the yellow shaded area, and even challenging the 100 period moving average right now here on the daily time frame. We just need to get a real sense of a breakout. Look at that black box, the blue zone, the yellow zone. It's been in this zone of congestion for a while. Is this a bullish engulfing candle? We won't really know until the day closes, truthfully, because, you know, what happens if we assume that this is going to be a bullish candle and by the end of the day it's bearish again? So you don't want to assume it's a bullish candle, but definitely watching for evidence of that breakout. We'll take it down to the 4-hour time frame. And again, there was the false breakout. It did push underneath the blue shaded area for a period of time. Look how many 4-hour candles we saw close underneath 96.70, and then eventually the market got volatile and turned back higher again. So we had a false breakout. Of course, never a guarantee of a real breakout or a false breakout. We have higher indications of that, but the market just changed its mind, turned back around. Today, we'll be looking for the breakout, open and close now, above 97.35 for the continuation towards the 97.9800 level, or the 97.80 9800 level, the green zone at the top of the chart. We haven't seen quite as strong of a volatility here on the euro, but it is turning around and going back in the other direction. Let's go ahead and zoom it in here on the daily time frame. You see this blue box. We've been inside this blue box for quite a while, somewhat of a range. Came off the orange zone, settled out here at the yellow zone for the past few days. Now finding some bearish movement. Dollar gaining some strength, finishing strong for the month, quarter, and week. And we see it back down here into the 1170, 1155 level. If we're going to see it go lower, we have to see it break through here. It has to get underneath 111.55. It didn't do it here. It challenged it, didn't do it. No open and close. So that's what we're going to watch for today. An open and close under the blue, pink zone gives us headway towards the low 111s. 111.25, 11100 will be the next stopping point on the way down. That's the green shaded area, and we can see the support here and here. So it's going to be an imperative that it breaks this pink zone, even on the 4-hour time frame, is what we'll be looking for. And that will be a push underneath the pink zone, 111.55.70. We'll give it headway to head down towards the low 111s for the euro dollar. Pound dollar, GBP USD hasn't been quite as volatile. We haven't seen as much out of this pair over the past 24 hours, but it has fallen back down into support. 29.50, 29.35 is the bottom, the green shaded area. We've seen a lot of support here. Not a great place to go short right now. A terrible place to go short. If you take a look at history, it found reversal from here. I don't think that we're going to look for a reversal as strong as the dollar has been over the past 24 hours, but I definitely think we don't want to go short into the green shaded area. The green shaded area is support right now. So if you're going to go short, it must break through that green shaded area, 129.35. Then you're heading back down to 129, and then of course that's the key breaking point to head lower for the GBP USD. Dollar CAD been quite volatile over the past few days. We've tried to trade it. It just didn't work out in our favor. Take it down to the 4-hour time frame. We saw the bearish movement here on the OPEC news a couple of days ago, the oil news. It fell down, came back up into the yellow zone as a rally into that resistance zone. Went ahead and took a short, and the market had a different idea and continued to pressure higher. Dollar rallying again, probably sent that above the yellow zone and pushing towards the orange zone. I'm going to stay away from this one for today, kind of lick my wounds on that, but definitely watching for some increased volatility as we come into 8:30 Eastern U.S. time because of Canadian data. Taking it over here to the U.S. yen, this was a very fruitful trade yesterday. We took a short on yesterday's trade into the U.S. yen. Very fruitful, saw about 80 pips of profit on the trade. The market turned around, came back up, knocked us out, then went back down. So increased volatility on this pair. We did get taken out of the trade, but it was a fruitful trade nonetheless. We've been trading the downtrend. Go ahead and zoom it in here on the daily time frame a couple of times. We were trading the downtrend, took the short. You see that little dash red line? Might be a little bit difficult to see. The little dash line represents the trade that we were in. We sold it at the top, 101.77. We saw the market push all the way down into the blue zone. Take a look. Let's just measure it from right from the 101.80 level to the bottom of today's candle. We saw it push down about 100 pips to the bottom of today's candle. Then the market turned back around, headed back up, took us out of the trade, and now we're back down into the 101.20. So if you were able to stay with it, of course, you're still in the profit. If you got out of it, of course, I closed some profit here into the blue shaded area when it was down here into the 100.90s and 80s. I closed some profit down there, taken out of the rest of the trade as it hit there into the pink zone. Take it down to the 4-hour time frame again. Look at that volatility. Well, actually, it probably took us out before it made that deepest push, but even that one red candle, there's our entry, top of that little red dash line. There's our entry right there. We saw it move down 90, 95, close to 100 pips, 90 to 95 pips. Then the market took us out on that spike and then went back down, and now we're just kind of hanging out inside here. So at least at this current point, it was a profitable trade. Let's call that one profitable. Good news is it probably made up for whatever we lost on the Canadian, and we could see just hanging out here in between the blue and the pink zone. Definitely, if you're going to go short again, it needs to be closer to the pink zone or under the blue zone. Otherwise, the dollar's taken a pretty good boost over the past 24 hours. It might be time for this to go a little bit higher, so I might be cautious on going short again. If you're looking to go long, obviously the blue zone gives you your lowest risk and highest potential reward. Take it over here to the AUD/USD, and of course, we've been going short and selling this currency pair. In fact, I still am holding some of that position. I've closed some of it. As you can see, I only have 0.2 lots on it, 0.02 lots left. Started with 0.05 on the trade, but now 0.02. Started with 5 lots, now 2 lots. So we've closed some of the profit, still sitting 52 pips of profit. So not a bad trade opportunity there. We go ahead and zoom it in. Of course, we are locked in on the trade. Can't lose on the trade at this point. But if you can see, we sold it up here at the blue shaded area into the bottom of the blue zone, 76.70. The bottom of the blue shaded area is where we took the short right here. And we can see it's been into profit all the way down here into the pink zone. When it was at the purple zone, I closed some profit. When it was at the pink zone, I closed some profit. If we can see the dollar take another push today, we could be looking for the breakdown of 75.80 and the continuation down towards the yellow shaded area down here. That becomes our next target if it can break through the pink shaded area. It could be prudent to bring your stop down just above the 76.40 level, the purple zone, to protect yourself in case it starts to turn back higher again. That is our area of risk right now. Oh, didn't mean to grab that, sorry. That's our area of risk right now. We don't want it to break back above the purple zone. So staying under the purple zone today is the hope for the remaining portion of the trade. If it gets above it, we're back into the blue shaded area at the top of the chart. I don't think it'll change it down on the 4-hour time frame. We just need it to stay underneath the purple shaded area, 76.20, 76.40 today for the continuation lower and continued profit on the remaining portion. Let's go ahead and take it down to the New Zealand dollar. We traded this one yesterday, saw profit on this one yesterday. The market took us out, and then now still holding within the low range. Of course, we've been in an uptrend. The red trend line really represents the last leg of the uptrend. We've started to change the market behavior along the blue trend line. It started to work its way lower. It just has been so unable to break the bottom of the support. Take it in, zoom it in a couple of times here. Look at that green shaded area. Let me scroll it over just a little bit. Look at this green shaded area on the chart. Look at that. I've circled them in red. Support, 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 and even today, finding support. So such a difficult time breaking through there. That's the imperative. It must break through the green zone if it's going to go lower. And that's what we're going to look for today. Yesterday's trade was into the orange shaded area. Again, you can see if I zoom it in. Well, let's take it down to the 4-hour and bring it over here. It's kind of hard to see it. There's 3 little white dots right here. Our trade was right there. The sell yesterday was on this candle right here with the black X's. You see the little white dot right there. That was our sell from yesterday during the live trade room. We saw the market go down 50 to 60 pips when it was here in the green zone, closed some profit. Market came back up, took out the remaining portion right around the 72.80 level. So we closed the remaining portion with profit, closed some of the profit into the green zone. So it was a profitable trade nonetheless. I think it's still the same valid trade for the day today. I think the trade's still valid. The orange zone is our selling opportunity. Above there, the risk is above it. If it breaks through there, you don't want it to do that. So zoom it out a little bit into the orange zone. If you're looking for an opportunity today, into the orange zone is your short opportunity, just like it was yesterday, targeting the green zone. And if we can ever get it to break that green zone, we'll look for much further profit on the way back down for the New Zealand dollar.
From Forex Traders Daily, this has been your daily analysis with Ross Mullins. If you would like to get Ross's analysis on all the currency pairs he's watching and all the trades he takes today, join him in his live trade room by clicking on the link below. Please leave any comments you have about today's video in the comments section below.